myself Sohaib Bisharat. I am financial auditor here at Dullal Mullah Auditing of Accounts. Today we will discuss the UAE VAT laws. Those are applicable on automobile sector and the different types of transactions under automobile sector and their treatment under UAE VAT laws. Let me share the screen so you can see the slides so it would be easier for you to understand. As we know, the most of the cars used here in UAE are manufactured outside the UAE. After that, those cars imported here, and the most of the automobile sector involve the trading of the cars rather than the manufacturing. So our concern would be the trading of the cars under automobile sectors. So we can start under the automobile sector. The transaction category can be categorized in different categories. The number one is the outright sale. The second one is the hire purchase agreement. The third one is the trade-in. And the last one is the sale of cars to the foreign governments, international organizations, diplomat bodies, and missions. What is the outright sale? Outright sale is the simplest form of sale, which is subject to 5%. In this kind of sale, the customer approaches to the dealer or the trader, make the payment and get the car. But the important point is that these kind of transaction involve the different activities, like the date of payment, like the date of receipt, the date on which the customer took the possession, and the date on which the car was transferred to the customer. The question is that what would be the date on which the dealer or the trader will treat the date of supply, on which date he will record the sale. So as per the FTA law, the date of supply will be the earliest of the following events. The number one is the date of the date on which the car is transferred to the customer. The second one, the date on which the customer took the possession of the car. The third one, the date of receipt of payment. And the last one is the date of issuance of the tax invoice. What if the outright sale involves the periodic payments or the consecutive invoices? So what would be the date of supply in this case? As per the FTA law, the date of supply would be the earliest of the following dates. The number one, the date of issuance of the tax invoice, the due date mentioned on the tax invoice, and the last one is the date on which the dealer or the trader received the payment. But the question is that on which quarter the dealer or the trader needs to take that output tax. So as per the FTA law, the dealer will take the output tax in the same quarter in which the supply is triggered, in which the date of supply is initiated. The second one is the hire purchase agreement. They are the two separate transactions. And the second one is the hire purchase agreement. There will be the two types of transaction in a hire purchase agreement. The first one is the sale of car from the motor vehicle trader to the finance company, and after that the finance company will sell the car to the customer. The first transaction is quite simple. The motor vehicle trader will charge the VAT to the finance company of the total value of the supply. But the second transaction is quite complicated. There would be the two components of that transaction. The first one is the hire installment, and the second one is the interest. You can say the finance charge. The hire installment, the principal amount that is paid by the customer to the finance company, the finance company will charge the VAT on that specific amount. And the finance company will not charge the VAT on the interest amount, because the interest amount is exempt under the UAE VAT laws. If you will see the diagram, it would be easier for you to understand. There are the three parties. The number one is the motor vehicle trader. The second one is the finance company, and third one is the customer. In a first transaction, the motor vehicle trader will sell the car to the finance company and will charge the 5% VAT. But in the second transaction, the finance company will sell the car to the customer. But there would be two components of this transaction. The first one is the higher installment and second one is the interest amount. The higher installment amount means the principal amount. The finance company will charge the 5% VAT to the customer. But the finance company will not charge the VAT to the customer on the interest amount. This transaction will be exempted for the VAT. For example, customer paid 100,000 installment that includes the 70,000 of the principal amount and 30,000 of the interest amount. So finance company will charge the VAT only on the 70,000 rather than 100,000. And if it is not possible to bifurcate the finance charge and the principal amount, so what would be the taxable amount in this case? So in this case, the finance company will charge the VAT on a total value, on a whole amounts. In this case, the whole installment will be fully taxable. And what if the finance company repossess the car before the expiry of the hire agreement? Under the UAE VAT law, this transaction will not be treated as VAT transaction. So no need to record the transaction under the VAT. The third one is the trade-ins. In a trade-ins, the customer trade-in his old car against the new car. In these kind of agreement, in these kind of transaction, the two separate supplies will take place. In a first supply, the trader or the dealer will sell the new car to the customer, and in the second supply, the customer will sell the old car to the dealer. But the important point that needs to understand, once the dealer or the trader will sell the car to the customer, he will charge the VAT and he will issue the tax invoice of total supply, of the total value of the new car. He will not net off the amount of the old car. For example, the value of the new car is 80,000 and the value of the old car is the 20,000. So the dealer or the trader needs to issue the invoice of the 80,000 rather than the 60,000. If you will see that flow chart, there are the two parties here. The number one is the customer or the seller, and the second one is the trader. In the first transaction, the trader will sell a new car at the full amount and will charge the 5% VAT. But in a second transaction, once the customer will sell the car to the dealer, we need to understand whether the customer now becomes the seller, is registered in VAT or unregistered in VAT. If that customer or the seller is unregistered in VAT, so that transaction will be out of scope straight away. But if that customer or the seller is registered in a VAT, so there would be two possibilities. That customer or the seller can charge the 5% VAT to the trader, or he might opt to charge the VAT under profit margin scheme. But there are some conditions that needs to be fulfilled to apply the VAT under the profit margin scheme. So what are the conditions that needs to be fulfilled to charge the VAT under the profit margin scheme? We will see it later. The last one is the sale of cars to the foreign governments, international organizations, and the diplomatic bodies and the missions. If the trader will sell the car to above mentioned entities, he will charge the 5% VAT. But there is an option for these entities. They can claim their input tax through special VAT refund scheme. And it is not required for them to get registered in a VAT to get refund this amount. Without getting the registration, they can refund their amount through special VAT refund scheme. There is another concept which is the price display. It is compulsory for the dealer or the traders to display the inclusive of the VAT prices, and they will also mention with the prices are inclusive of the VAT prices. They cannot quote, they cannot display the exclusive of the VAT prices. But there are two exceptions of this rule. The number one, where the supply of the car is for export. As we know, the export is zero rated, so there is no point to mention inclusive or exclusive of the VAT. And the second one is where the customer is registered for VAT. For example, if you are giving any quotation to the customer which is registered in a VAT, in this case, it is not compulsory for you to give the inclusive of the VAT value. You can give the quotation which includes the exclusive VAT value, the VAT value, and the inclusive of the VAT value. The next topic is the sale of used car or the pre-owned cars. The sale of the used car is subject to 5% here in UAE, and the other implication will related to the date of supply, invoicing obligation, and the payment of tax will be same as the new cars. But the difference is that the dealer of the used car might opt the profit margin scheme. What is the profit margin scheme? In a profit margin scheme, there is the option for the dealer to charge the VAT only on a profit margin rather than to charging the VAT on the total supply, total value of the supply. But there are some conditions that needs to be fulfilled to apply the VAT under the profit margin scheme. The first one, the car must be purchased from the unregistered person or from the person who already applied the profit margin scheme on that specific car. If you will buy the car from any other person, you cannot apply the VAT under the profit margin scheme. And there are also some other conditions that needs to be fulfilled to apply the VAT under the profit margin scheme. The second one, the input tax is not being claimed at the time of purchase. Mean once you purchase a new car, the input tax was not claimed at the time of purchase of new car. If you already claim the input tax, so you cannot charge the VAT under the profit margin scheme for that specific car. The third one, the car must have been subject to VAT before the supply in question. In a simple words, you can say the car was purchased after the implementation of the VAT here in UAE, mean after the 1st of January 2018. And fourth point mentioned that if you are charging the VAT under the profit margin scheme, so it would be compulsory for you to mention on the tax invoice that specific invoice is being issued under the profit margin scheme. And as per the FTA law, you must keep the record and the documents for the profit margin scheme as prescribed by the FTA. So what are the documents required by the FTA? The number one is the stock book, and second one is the purchase invoices. In a stock book, you have to mention all the purchase and sale related to the profit margin scheme. And purchase invoices mean purchase invoices related to the profit margin scheme, all the cars you purchase under profit margin scheme. And the last and the most important point, the trader must inform the FTA that he is opting the profit margin scheme. But the question is that how he will intimate, how he will tell the FTA he is opting the profit margin scheme. If you will go to the return, there would be one checkbox. You have to click that checkbox. If you will click that checkbox, so that will intimate to the FTA that you are opting the profit margin scheme. Exceptions of the profit margin scheme. There are two exceptions of the profit margin scheme. Means under these cases, you would not be able to charge the VAT under the profit margin scheme if that car was purchased before the implementation of the VAT, mean before the 1st of January 2018. And second one, the car was imported, and at the time of the import, you recovered the input tax on that specific car. If you have already recovered that input tax, you would not be able to charge the VAT under the profit margin scheme for that specific car. The next one is the lease of car. The activity of leasing of the car is a taxable activity here in UAE and is subject to 5%. And the other implication related to the date of supply, invoicing obligation, and the payment of the tax will be the same as we discussed earlier in the section 2.1. But if the lease is for extended period, for the periodic payment, or for the consecutive invoices, so what would be the date of supply in this case? In this case, the date of supply will be the earliest of the date of issuance of the tax invoice, the due date mentioned on the tax invoice, or the date when you receive the payment. But the important point that you need to consider, any of these events should not exceed 1 year from the commencement of the lease. And what would be the value of the supply? The value of the supply will be the consideration received less the tax amount. In a simple word, you can say whatever the amount you received will be considered as inclusive of the VAT. You have to work back and you need to calculate the taxable amount. The next one is the export of sale. As we know, the export sale under the UAE VAT law is the zero rated. But there are some conditions that needs to be fulfilled to categorize the sale as a zero rated. And under the UAE VAT laws, there are the two types of exports. The number one is the direct export, and the second one is the indirect export. In a direct export, the seller is responsible for the transportation of the cars, or he appoints the agent on his behalf to do so. And what are the conditions under the direct export to categorize the export as a zero rated? The number one, the car must be physically exported outside the UAE, or the cars are in custom suspension regime within the 90 days from the date of supply. Apart from that, the seller must get the commercial evidence of export or for the custom suspension. Indirect export. What is the indirect export? In the indirect export, the buyer will be responsible for arranging the transport, or he appoints an agent to do so on his behalf. Now we can discuss the conditions that needs to be fulfilled in the case of indirect exports to make the transaction, to categorize the transaction as zero rated. The number one is the same as the previous one. The cars are physically exported to the place outside the UAE, or the cars are in custom suspension regime within the 90 days from the date of supply. And the third one, the customer obtain the official commercial evidence of export of or the custom suspension. The important point that needs to consider, in the case of indirect export, the customer is responsible to get the commercial evidence. But in the case of direct export, you can see the seller is responsible to get the evidence of commercial export. The fourth one, the cars are not used or altered in time between the export and the custom regime. If you will use the car, whether the seller or the buyer, within that specific period, so after that, this car cannot be treated as an export, and you cannot categorize that specific transaction as zero rated. If the goods do not leave the UAE, it must be in the possession of the passenger or the crew member of the aircraft or the ship. These are the 5 conditions that needs to be fulfilled to categorize the transaction as a zero rated. Otherwise, you will not be able to charge the 0%. If these conditions will not be fulfilled, the 5% VAT will be charged at the supply. The next topic is the import of cars, and that will continue by Mr. Ali Shamas, our audit manager. Over to you, Mr. Ali. Thank you.
So first, let's introduce you.
Can I sit here?
The light is not on. So here you can introduce yourself, and then you need to click share screen. See, after introducing yourself.
Okay.
So I will close the loop. Then you click share screen and you click here. Okay, then the slide will come.
Okay.
You can try also. कुछ नहीं होता, ऐसे ही होता है, कोई भी बंदा आपको समझाएगा सीधा। आप कितने बार कोई भी
Okay. Can I look like this, for example?
No. You after you share the screen, then you can go there.
Yeah.
You need to place slides here. Because otherwise you see these slides.
Okay. So.
Yeah.
It's Ali Shamas from Abdullah Mulla Auditing and Accounting. Okay, Sarah and Shamas from AM Audit. I am audit manager. Okay, so I will continue to explain automotive sector. Okay. Okay.
Make sure to share your screen. After you introduce yourself, click share your screen. And then your face will disappear, then you look there or there.
Okay. Okay.
After introducing.
No, record or it's record?
It's recorded.
Oh, okay. It's recorded. Cool.
Just if you make a mistake, take a note and then start again. So then class and
Take the was first. Hello, it's Ali Shamas, audit manager at Abdullah Mulla Auditing and Accounting. Now I will continue to explain about the automotive sector. I will speak about the import card, warranty, and auction. So I will share now screen. Okay, share. Now import of card. Imposition accounting for import VAT. When cars are imported into the UAE from abroad, the card will be subject to import VAT at 5%. So import VAT is imposed on the customs value as calculated pursuant to custom legislation, including the value of insurance, freight, and any custom fees paid on the import of the card. Where the determination of such customs value is not possible, then the value can be determined based on the alternative valuation rules stated in the applicable custom legislation. The obligation to account for import VAT is on the importer. being the person whose name is listed as the importer of the relevant car for customs clearance purpose. The mechanism for accounting for VAT or imported car depend on the VAT registration status of the importer at the time of importation. Deferred payment at the time of filing the VAT return. In certain situations, an importer may be able to account for VAT in the VAT return, which relates to the tax period in which the car are imported. Also, in order for this to occur, the importer must meet the following conditions. The importer must be registered for VAT at the time of import. The importer must have sufficient details for the FTA to verify the import and the VAT which is due on the import and is able to provide this as required. The importer must have provided the FTA via the e-services portal with its own customs registration number issued by the competent customs department for the import in question. Also, the importer must cooperate with and comply with any rules imposed by the FTA in respect of the import. This picture, here we have, for example, seller. Sorry. Import of car. Import with the assistance of an import clearing agent. Often, the task of importing goods into the AE and fulfilling all importation formalities is delegated to a clearing agent, where a clearing agent or equivalent business is importing goods on behalf of a VAT-registered importer. The clearing agent should declare the importer's TRM on the custom import declaration. They will allow the importer to account for the import VAT in its VAT return as described in section 6.2. On the other hand, where a clearing agent is importing goods on behalf of non-registered importer, the agent should declare its COTRN on the customs import declaration and should be responsible of the payment of VAT in respect of the import in its VAT return. Exception from import VAT. Certain categories of goods are relieved from import VAT. In some cases, these categories generally mirror lives which are available in respect of customs duty, therefore allowing certain goods not to be subject to both VAT and customs duties. Goods are not treated as imported in the UAE, where they are under customs duties suspension arrangement. For example, temporary admission, goods placed in a customer house, goods in transit, imported goods intended to be re-exported by the same person. Exception also for exception where any of the above exception applies, the movement of goods into the UAE is not treated as an import and therefore not subject to import VAT. If any conditions for the VAT suspension are subsequently broken, the goods can be treated as having been imported into the UAE and the VAT will become due on the import from the date the goods were imported. In order to benefit for these exceptions, the importer is required to provide a financial guarantee to the FTA via clearing agent for the amount of VAT chargeable in respect of the goods. This guarantee will be refunded once the goods leave the UAE. Okay, what is speak about here? Exception term. Now, purchase return after import. It may happen that after the importation of a car by a motor vehicle dealer, the car is returned to the overseas original manufacturer and consequently exported out of the UAE. At the time of importation of the car, the motor vehicle dealer would have accounted for import VAT and would have recovered the input tax in box 10 of the VAT return. Upon return of the car, the motor vehicle dealer should make a negative adjustment in box 7 and box 10 of the VAT return of the tax period in which the car is returned and exported out of the UAE. Now, warranty claims. Warranty claims, the warranty service is guarantee given by the manufacturer to his customer undertaking the remedy and defect of the car due to faulty workmanship or materials for a specified period. Generally, a warranty service is made available to the customer at the time of sale of the car, and in such instance, the price of the warranty service is included in the price of the car. In other cases, the warranty service is supplied separately from the sale of the car, and in such instances, the price for the warranty service is charged separately. Warranty service supply for an extra charge. A supplier may provide its customers with the option to purchase and extend warranty for a specific period. The extended warranty is provided for a separate charge, and the supplier undertakes to rectify and detect in the car during the additional period and does not charge any further amount to carry out actual repair services. Also, the supply of an extended warranty is a taxable supply of services, which is subject to VAT at 5%. Warranty service supply also for extra charge, where a distributor provides warranty service to a customer in the UAE, no VAT implication arises. This is because a distributor's warranty for no extra charge is treated as a composite supply together with the vehicle sold on which VAT has already been accounted for at the time of the original sale. The supply made by the distributor under a warranty arrangement with the manufacturer is a separate supply for VAT purposes. The VAT treatment relating to the recovery of costs relating to such supply need to be determined independently. For vehicle manufactured outside the UAE, a key point to note is that the reimbursement of costs by UAE distributor for overseas manufacturer to carry out warranty repair is subject to VAT at 5%. This is because the prerequisite for treating the supply as zero-rated export of service and connection goods is not met. Here we have example. For example, okay, Germany-based manufacturer of car XYZ sell car in the UAE through its exclusive distributor ABC LLC. Muhammad purchased a car for ABC LLC, and the sales price includes a 5-year warranty. On noticing some issue in the engine of the car, Muhammad took the car for service. ABC confirmed that certain parts in the engine need repair and that the service will be covered under the warranty. So ABC did not charge any fees to Muhammad for repairing the engine. It recovers the cost from XYZ, the supply made by ABC to XYZ to carry out warranty repair is subject to VAT at 5%. Supply will not qualify for zero rating because the services are provided directly in connection with goods situated in the UAE. Now we have to speak about auction. Auction, so motor vehicle trader may make sales for car at auction. Auction are places where goods are sold to the highest bidder The VAT treatment of auction depends on whether the auctioneer is acting as a principal supplier or as an agent on behalf to another person. Auctioneer acting as a principal supplier. In this instance, the auctioneer is for VAT purposes the principal supplier of the car. This arrangement is also known as undisclosed agency, where two supplies take place for VAT purposes between the seller and the auctioneer and between the auctioneer and the customer. Auctioneer acting as an agent of the principal supplier. The second type of arrangement, which is more common, is when the auctioneer is not the owner, supplier of car, but simply provides a marketplace and assistance in the process of selling the car belonging to another through the auction. This arrangement, also known as disclosed agency. In such situations, the auctioneer is not a principal supplier of the car in question. Instead, the auctioneer is acting as an agent on behalf of and in the name of the owner of the car as per Article 9 of the Decree Law. As a consequence, when the cars are sold, the sale constitutes for VAT purposes a supply by the principal seller directly to the principal buyer, with the auctioneer being ignored for the purpose of the sale. This means that the VAT treatment of the sale of the car must be considered from the perspective for the principal supplier, owner of the car. Depending on the fact of the sale, the supply may be either standard rate if the principal supplier is registered for VAT, zero rated if the principal supplier is registered for VAT and the car exported from the UAE, or outside of scope of VAT if the principal supplier is not registered and not required to register for VAT. Okay, here, for example, we have seller, auctioneer acting as principal. So from seller to this auctioneer acting as principal, we have to charge 5% standard rate. And from auctioneer acting as principal to the buyer, we have to charge also 5%. And if directly if the auctioneer acting as agent, from seller to buyer, it's 5%. Here, the auctioneer is ignored. Issuance of tax invoices by auctioneer on behalf of the principal supplier. The tax invoice must be issued by the VAT registered supplier of the car itself. A VAT registered agent which make a supply on behalf of a VAT registered principal supplier may issue their own tax invoice in respect of the supply with the particular of the agent, as if that agent had made the supply of goods or service itself. The invoice should, however, contain a reference to the principal supplier, including the supplier name and TRN on the invoice. Commission charged by auctioneer. It's common that the auctioneer will charge a commission or premium to the principal supplier of a car or the buyer of a car or both. This commission or premium is consideration for a taxable supply by the auctioneer for auctioneering services. So it's a taxable supply here. This commission considered as a taxable supply. For example, Motor LLC is a car trader and operate auction of car in the UAE. On a certain date, Motor sold 2 cars in an auction. The first car was sold by Motor as a principal supplier, and the second car sold as an agent for a VAT registered company. Zenith. Motor, being principal supplier for the first car, is responsible for undertaking all VAT obligation relating to the sale, including issuing a tax invoice and accounting for VAT. Zenith being the principal supplier for the second car, is responsible for undertaking all VAT obligation related to the supply. Motor LLC may issue a tax invoice on behalf of Zenith in accordance with Article 59 on the executive regulation. So the responsibility here to account for VAT on the sale of the second car will still be on Zenith LLC. Promotion and discount. Free promotional gifts. Motor vehicle trader often offer promotional gifts with the sale of car free of charge. This means that the motor vehicle trader does not receive any consideration for the supply of free gifts. So here, where the motor vehicle trader recover input tax on the purchase of the gift and in turn supply such a gift free of charge, the free supply will be subject to the deemed supply. However, if the motor vehicle trader does not recover input tax on the purchase of this gift, so the deemed supply provision will not apply. Discount. In addition to offering free gifts, motor vehicle trade also operate promotional schemes. They offer discount on the sales price of the car, where a motor vehicle trader funds the discount and the customer benefits from the reduction in price that is applicable on the discounted value charged by the motor vehicle trader. So a motor vehicle dealer may itself receive a volume discount from the original manufacturer on purchasing a specified number of units. So here, where a volume discount is provided by the original manufacturer, for example, a discount on purchasing 100 units of car, the manufacturer should clearly state the discount on the invoice. In addition, a motor vehicle dealer may also receive a contingent discount or payment from the original manufacturer, such as a discount on achieving a sale target or a payment upon selling a specified number of units of particular car model. Here, in this case of contingent discount or payment, the parties should evaluate whether the discount payment is in reality reduce the original value of the car, or it's in fact consideration for a separate supply made by the motor vehicle trade. Where the discount payment actually reduces the original value of the car, the manufacturer should issue a credit note to reduce the value. If the discount or payment is received because the motor vehicle trader has performed a specific activity, the motor vehicle dealer should issue a tax invoice and charge VAT at the appropriate rate depending on the nature of the supply. 10 company cars and demo cars. The input tax incurred on the purchase, rent, or lease of a company car is blocked if the car is available for the personal use of an employee. Motor vehicle traders often display a demo car in their showroom for demonstration test driving purposes, as a demo car cannot be sold at the full retail value. The manufacturer may agree to make one-off payment in respect of each demo car to compensate the trader for the lower retail value. Here, where the payment made by the original manufacturer is a reduction of the original sale price, such a payment will be considered as retrospective discount. In such a case, the original manufacturer should issue a credit note to reduce the original sale price. In contract, if the payment relates to any obligation assumed by the motor vehicle trader to perform a specified activity, the payment will be treated as consideration for a taxable supply, and the motor vehicle trader will be required to issue a tax invoice and charge VAT at the appropriate rate, depending on the nature of the supply. So here, our webinar is ending. So thank you very much. I think I need to. Fine. Yeah. Thank you very much. The webinar is ending, so thank you. But you have to edit something or create something because maybe reading fault because I read here and here.